There is this very specific montage we all have in our heads. It usually starts about 3 days into a vacation. You've had the coconut, you've swum in that turquoise water, the sun is setting, and your brain it just snaps. You think, that's it, I'm done. I'm buying a villa here. I'm never leaving.
It is the ultimate escape fantasy. And honestly, it's a beautiful fantasy. I've been there. I think we all have.
Exactly. But today, we are going to ruin that fantasy just a little bit.
Or maybe save you from ruining your bank account with that fantasy.
That's a better way to put it, because I've got a stack of documents here that suggest the moment you fall in love with the island is actually the most dangerous moment for your financial health.
That is a fair assessment. Because when the dopamine is high, the due diligence, well, it usually hits rock bottom.
Right. So today we are doing something different. We aren't looking at the infinity pools or the glassy brochures. We are looking at the part nobody wants to talk about while sipping a Mai Tai, the exit.
We are deep diving into the mechanics of profit, liquidity, and specifically the tax traps that catch foreigners off guard in the Phuket market.
And to be clear, we aren't just speculating here or, pulling numbers out of thin air.
No, not at all. We are pulling this data directly from the field notes of Ocean Worldwide. They're a luxury real estate agency that has been based in Phuket since 2004.
Which is significant. I mean, think about that timeline. Since 2004.
Yeah.
That means they've seen the post-tsunami recovery, they navigated the 2008 financial crisis, the military coups, COVID, all of it, the whole boom-bust cycle.
Exactly. We're looking specifically at insights from Sandra O'Neill, she's the director there, and she has helped, literally, thousands of families and investors navigate these specific waters.
So think of this less as a how-to-buy guide and more like a how-not-to-get-stuck guide from veterans who are actually on the ground.
Right, and their core premise is pretty counterintuitive. They argue that the single most important day of your investment isn't the day you get the keys.
It's the day you sell.
It's the day you sell. It sounds backwards, doesn't it?
It does. Usually the exit is an afterthought.
But Ocean Worldwide uses this analogy of the holiday that I think is just brilliant. You wouldn't board a plane to a foreign country without a return ticket, or at least a plan for how you're getting home.
You don't just land and say, well, I guess I live at the airport now.
Right. But people drop $500,000 or more on a villa without asking.
Without a second thought.
Who do I sell this to? When? And for how much?
That's the trap. Because the Phuket market is unique. It isn't London or New York where you have, high liquidity. If you buy with the wrong entry strategy, you can find yourself holding an asset that is beautiful, yes, but financially frozen.
And that's the key insight. Your exit dictates your entry.
Okay, let's unpack that. Exit dictates entry. So you're saying if I'm looking for a quick profit, I should be looking at a physically different building than if I'm, say, a retirement buyer.
Completely different assets. Let's look at the flipper first, the quick profit hunter. If you want to get in and out in, say, 12 months, you're looking for value add potential, something under market because it's tired or the layout is dated. You're hunting for inefficiency.
Whereas if I'm buying for long-term growth holding for 10 years, I don't care about the paint color.
No, you care about infrastructure. You're looking at macro trends. Where's the government building new roads? Where are the new international schools breaking ground? You're betting on the location popping in a decade, not the house itself.
And then there's that third bucket, which I think applies to a lot of our listeners, the rental income buyer.
Right. And if your exit is undefined, if you're just holding for yield, you need immediate appeal. You need the pool to be Instagram perfect today. You can't buy a project. You need a turnkey operation because vacancy is your enemy. Every day that house is empty, you're losing money.
It's interesting because the source mentions that the emotional allure just short-circuits this logic. You fall in love with the sea view, and you forget to ask, wait, is this a flip, a hold, or a yield play?
And when you mix those strategies, you lose money. So let's dig into strategy A, the fix and flip, because this is the one everyone thinks they can do after watching a few renovation shows.
The HGTV effect. Buy low, renovate, sell high. But Sandra O'Neill's team put some pretty strict guardrails on this. It is not a weekend hobby.
No, absolutely not. They outline a very specific timeline, a 6 to 12-month cycle. That's roughly 1 to 3 months to identify and close, 2 to 5 months to renovate, and 2 to 4 months to market and sell.
That marketing period, 2 to 4 months, stood out to me. That's not instant. You have to carry the cost for that entire time.
And that's assuming you price it right, which we'll get to. But let's talk about where you find these opportunities. You aren't going to find a high-margin flip in the most saturated luxury district where prices are already peaked.
The data points to areas like Lan and Nayang.
Yes. These are areas Ocean Worldwide identifies as up and coming. They have the natural beauty, the beaches, the parks, but they aren't fully built out yet. They're less crowded, which allows for that entry price arbitrage.
Okay, now here is where I think people get burned. The renovation trap. I assume if I'm flipping, I need to gut the place. New walls, new roof, total overhaul.
And that is the fastest way to destroy your margin in Thailand. You have to remember, structural work requires permits, heavy crews, and time, lots of time. And in a tropical climate, if monsoon season hits while your roof is off,
You are in big trouble. So what's the alternative?
the source calls it cosmetic value adds. You aren't rebuilding the skeleton, you're putting makeup on the face. Fresh paint, modern landscaping, or maybe upgrading the kitchen surfaces?
They gave a specific example of a 4-bedroom pool villa in Pasak built in 2022.
Right. And that villa represents the target. It has modern flow, open plan, indoor-outdoor living. If you can take an older, darker Thai-style villa and open it up to look like that without knocking down load-bearing walls, that's where the profit is.
And the premium for doing this right.
If you can secure a property with a sea view or within walking distance to the beach, the data suggests a premium of 20 to 30%.
That's significant. But you're really fighting for those specific locations.
You are! You can change the kitchen, but you can't move the house. If you're flipping, location does 80% of the heavy lifting.
Okay, that's the aggressive strategy. But let's be honest, a lot of people looking at Phuket aren't trying to become developers. They want the lifestyle. Let's talk about strategy B. Buy, rent, retire.
This is the hybrid model, and Ocean Worldwide suggests it's the most popular for their demographic. You buy the property now, maybe while you're still working in London or Singapore, and you let the rental income cover the costs. Then, in 5 or 10 years, you move in.
It solves the cash out problem. You don't have to worry about selling into a down market because you aren't selling.
Exactly. The asset transforms from a financial instrument into a lifestyle instrument. But for this to work, you need a specific location. The source highlights Bang Tao heavily here.
Why Bang Tao? We hear that name a lot.
Well, it hits the sweet spot. It has the high-end amenities that vacation renters pay top dollar for: beach clubs, fine dining, but it also has the infrastructure for long-term living. International schools, supermarkets, world-class medical facilities. It's a real community.
But there is a massive operational risk here. If I'm sitting in New York and I own a villa in Bang Tao that I plan to retire in, a lot can go wrong in 10 years.
This is where the source is adamant. Professional property management is not optional.
I think people underestimate what the tropical environment does to a building.
It's brutal. High humidity, salt air, intense sun. If you have a leaky air conditioner in Phuket and it goes unnoticed for 3 months, you're going to come back to a mold disaster.
So the management fee isn't just about finding tenants. It's basically an insurance policy on the building itself.
Precisely. You are preserving the equity so that there is actually a house left to retire in.
Okay, so we've covered entry strategies, but eventually even the retiree might want to sell. So we need to talk about the hard mechanics of selling. This is where I want to talk about liquidity.
The danger zone.
Can we define this? Because in the stock market, liquidity just means clicking sell and having cash in 3 seconds.
Right. Real estate is inherently illiquid, but luxury real estate in a resort market is highly illiquid. You cannot force a sale unless you are willing to take a massive loss.
The force provided some data on days on market and how it impacts your actual return, your IRR.
This was the most sobering part of the report for me. Let's take a 20 million baht property. If you sell that quickly, say within 3 to 4 months, your internal rate of return might be a healthy 12 to 17%.
That's a great return.
It is. But if that same property sits on the market for 12 months or 18 months, that IRR drops to 7% or even lower.
Why so fast? Is it just the time value of money?
It's that, sure, but it's also holding costs. You're still paying common area fees, pool cleaning, garden maintenance, taxes, all while the capital is tied up doing nothing. The longer it sits, the less profitable the whole venture becomes.
And there's a luxury trap here, too.
Yep.
The more expensive the house, the harder it is to sell.
Yes. If you have an ultra-luxury villa, we're talking 100 million baht plus your buyer pool is tiny, you might be waiting years for the right person to come along.
So how do we avoid becoming a stale listing? How do you price it so it actually moves?
You have to ignore your neighbor.
Ignore the neighbor.
Oh, but
Their house is listed for a fortune.
ignore what your neighbor is asking. The source emphasizes using a comparative market analysis, a CMA based strictly on sold prices. There is often a massive gap between the listing price, which has hope value baked in, and the sold price, which is reality.
Sandra Neal's team gave us some averages to set expectations. These were eye-opening.
Let's do it.
Okay, a one-bedroom condo, entry level.
Average sold price is around 5.2 million baht. Average time to sell about 90 days.
3 months, okay. Move up to a three-bedroom pool villa.
Average sold price 17.5 million baht. Time to sell 120 days, 4 months.
And now the dream, the beachfront property.
Average price 33 million baht and up. Time to sell 180 days, 6 months on average. And remember, that's an average. It could be a year, it could be 2.
So the takeaway is, if you need emergency cash, do not put it in a beachfront villa.
Absolutely not. It is a slow-moving asset class.
Now, speaking of money and timing, we have to talk about the gotcha, the segment that actually made me sit up straight, the taxes. Specifically, this 5-year rule.
This is the single most critical piece of knowledge for a foreign investor in Thailand. It can literally swing your profit by tens of thousands of dollars.
Break it down. What happens if I sell too early?
The government discourages speculation. So if you sell a property within 5 years of buying it, you get hit with specific business tax. That is a flat 3.3%.
Okay.
And it's levied on the total sales price or the appraised value, whichever is higher.
Wait, 3.3% of the total revenue, not the profit.
Correct. It's off the top line.
That is huge.
Plus, you have imputed income tax, which is progressive and can go up to 35%. It stacks up fast.
But if I wait,
if you hold for more than 5 years, you are generally exempt from the specific business tax. That 3.3% liability just vanishes. And the way the income tax is calculated becomes much more favorable.
so quite literally, selling on day 1,824 versus day 1,826 could be the difference between a profitable exit and a break-even one.
Exactly. Your exit timeline isn't just a preference, it's a tax strategy. You need to look at the calendar before you list.
They also touched on corporate ownership versus individual. I know we can't give legal advice here, but what's the gist?
The gist is that it changes the tax code entirely. If a company owns it, you're dealing with corporate income tax. If you own it personally, it's withholding tax. It gets complex.
Which leads to the idea of financial flexibility. What if I'm at year 4, I need cash, but I don't want to trigger that tax by selling?
Well, Ocean Worldwide points out that the Thai financial market is maturing. It's becoming easier to do things like equity release or refinancing.
Like a ELOC in the U.S.?
A similar concept. You leverage the property to take out a loan, pulling liquidity out without actually selling. You keep the asset, you keep the rental income, but you get the cash.
Smart. But again, not something you can just figure out by Googling.
No. And that brings us to the final pillar of this deep dive, the necessity of a team.
It sounds like a sales pitch, hire an expert, but after looking at the tax complexity in these whisper numbers, I get it.
It's the unknown unknowns. You don't know what you don't know. The source lists a kind of holy trinity of advisors you need.
First up, the financial advisor.
Right. For the big picture. Does this asset fit your global portfolio? Can you afford the illiquidity?
Second, the lawyer.
Non-negotiable in Thailand. The land laws for foreigners are strict. You need a lawyer to ensure you actually own what you think you own.
And third, the local agent. And I want to circle back to that term you mentioned, whisper numbers.
This is key. Online listings in Phuket are often outdated or aspirational. A veteran agent like Sandra O'Neill knows that Villa X is listed for $25 million, but the owner is going through a divorce and will take $18 million today.
That information isn't on a website.
No, that information is in the agent's head. That's the value of the whisper number. It's the real market price.
They also mentioned timing the market based on tourism.
It's simple supply and demand. You want to sell when the island is full. You want to list your property during high season, December, January, when potential buyers are physically there, drinking the coconuts, falling in love.
You're selling the dream while they're living the dream.
Exactly. Don't try to sell a beach villa in the middle of monsoon season when it's raining sideways.
So let's wrap this up. We've covered a lot of ground.
We have.
The big takeaways. First, exit dictates entry. Know if you are flipping or retiring before you find the check. Second, liquidity is a real risk. Don't expect to cash out in a week. And third, watch that 5-year clock.
The tax man is waiting. That sums it up perfectly.
But I want to leave our listeners with one final thought. We've spent all this time talking about how to get rid of the property. But going back to that buy, rent, retire strategy, maybe the ultimate exit isn't a sale.
Go on.
Maybe the best exit strategy is realizing that you don't want the cash, you want the sunset, you stop being a landlord, you stop worrying about yield, and you just start living in the house.
I like that. The return on investment isn't a percentage. It's a quality of life. And honestly, if you navigate the purchase correctly, that's a luxury you've earned.
Exactly. Now, for those of you listening who want to see the actual data or look at those whisper numbers, or maybe you just want to see what a modern flow villa in Passac looks like.
You need to go to the source.
This deep dive was powered by the insights of Sandra O'Neill and Ocean Worldwide. You can find them at oceanwwp.com. That's oceanwwp.com. If you're serious about Phuket, start there.
Get the pros on your side.
Thanks for diving deep with us today. We'll see you next time.
Goodbye.